All right, the focus squarely remains on the rupee and where it will possibly go. We've got Saugata Bhattacharya, who's chief economist at Axis Bank, joining us now on the show. Saugata, now one argument is that on a real basis, the rupee is, ideally ought to be at 53 half levels. It's today at 57, so that the rupee is oversold. Maybe it is a great time for investors, foreign investors, to be coming in because the upside then is tremendous. Would you agree with that?
To a certain extent, yes, George, that if one were to consider the real indices as some measure of fair value of the rupee, although I have my doubts on that, but it does seem to indicate that we have been oversold. And frankly, I think the slide in our fundamentals are probably not commensurate with that of the rupee. And as your previous guest just said, that this is probably a fantastic buying opportunity into Indian assets, whatever assets, at this level of rupees, because the expectation is, I too would be very hesitant in giving out any predictive numbers, because the currency markets have actually, the transaction volumes have come down significantly after the RBI measures. And it's only a little small inflows and outflows of funds which can move the market significantly. If exporters at this point in time, with their forward positions, take the case that this is probably the bottom of the market, then some funds will begin to come in from there, and that will probably turn things around. The RBI measures yesterday to further open up the currency markets will also probably lead to some inflows, probably not the full extent of the windows that have been opened, but some inflows are likely to come in. And in thin markets, that should probably be enough to start the rupee back again. Having said that, it's still not very clear whether we are at the bottom or whether some further slide is on the cards. That's perfectly possible. That's absolutely feasible. But our sense, again, is that going in over the rest of the year, that you're more likely to see appreciation rather than further depreciation of the rupee, although the rise will probably not be that great.
Saugata, to dwell more on RBI's policy measures that were announced yesterday, do you think that with the goal of improving the capital flows in the medium term, that some of the measures that were announced were tactical?
Probably yes, because I mean, if you see the utilization numbers for the previous limits, much of those limits have been utilized. I mean, it's only in the longer term with the windows with the longer maturity, the limits of the longer maturities, only those haven't been utilized, and yesterday's actions have brought those limits, the maturity limits, down as well. So these do make the markets more attractive. And given everything else, despite the slowdown, the fairly steep slowdown in growth that we are seeing, the returns from Indian markets still remain quite attractive. And with the possibilities of these, the maturities being cut down, the trading opportunities increase. So I think these do set the ground conditions for further inflows. Having said that, of course, I mean, the next round of measures that investors would be, now that these opportunities are available, the next set of measures that would be looked upon by investors would be all the other rest of the policy related measures and reforms that are being looked upon from the state government, central government, and so on.